Good morning, friends. Friday, August 2nd. First chart I want to start off with today is the TBT, the ETF TBT, which is the ultra short Lehman 20-year Treasury bond. I just want to review something real quick and just show you a little something that I did 2 days ago. And the reason I didn't discuss it 2 days ago when I was stopped out of my long trade at 74, remember I was long at $74 a share. Took a third of the trade off at $75.25 and then trailed up the remainder when the market gapped up here and took out this high. I trailed up that stop below this high right in here, and I was stopped out on this big down day, this big engulfing pattern right in here. I was stopped out at $76.35, making $2.35 on that. Now, the reason I didn't bring it up yesterday was just because I typically leave the options discussion to Doc, right? Doc is the options pro here at Trading Concepts, so I try to leave everything, options related to Doc to discuss. But I'm going to be real quick about what I did. When I got stopped out of that long trade, what I did, and this is what I typically do, the week of expiration, okay, today, the TBT, right? Sometimes there's weekly options, right? There's a few that expire today, August 2nd. So what I did on Wednesday, right? This is Friday right here, right? Yesterday was this day, and so on Wednesday when I was stopped out of that long trade, and the market continued to move lower, I started looking at my options chain for TBT, and I'm thinking, okay, today's Wednesday. Let me look at the August 2nd expiration. And so what I was able to find was I was able to sell, okay, I was able to sell, and I've got it right here, I was able to sell a $75. I was willing to go long at 75 if I was put the stock at $75 to collect 72 cents of premium for just 2 days work, okay, because I want to be long this. So I was stopped out. I flat this market, and so instead of just going long the underlying immediately, I decided to sell the puts to collect the premium. So again, 72 cents. I did 10 of them, okay, which would have got me long 1,000 shares today if it closes at 75 or lower, okay, and it's trading at $76.87 right now, and that same option, the option I sold at 72 cents on Wednesday, is now 3.5 cents, okay? And then I sold 10 more down lower, same strike, okay, not same strike, but same expiration, today expiration, it's 73. So $75 is right here, 73 is right down in here, okay? So for that 73 strike price, okay, so for that 73 strike price, okay, I was able to I got 31 cents only. Not a lot, but again, 2 days, two-day time risk only on this. And that same trade at 31 cents I sold is worth a penny and a half right now. So I love those types of trades. If the market sells off really hard on a stock or an ETF that I really want to own, the week of expiration, and I'm able to get enough premium out of it, in this case, hey, 72 cents and 32 cents for less. And I put this on Wednesday afternoon, so less than 2 day risk on this. So right now, I mean, not bad. If I, doing 10 puts on each, I mean, 72 cents, that's $720, right? And then 31 cents, that's $300. That's $1,000 for less than 2 days of work, and not even owning anything, just selling the puts on something that I already want to own. So not bad, right? So look at it, it's traded at $76.77 now. I could easily take these off for 1.5 cents, right? Making close to $300 on doing 10 of those puts. And on the 75 strike, right, I'd be collecting a little over $700 now, okay? I don't know. It depends. I might take it off earlier, just let it expire worthless. If it expires worthless, at this point, I would only be collecting, okay, about $50 to $100 more. That's it. So I probably will take it off premature and not even wait the entire day. So I just wanted to let you know. Again, I let the options discussion for Doc, because Doc is really, really the pro, and I know he articulates it a whole lot better than I understand the concepts very well, but for me to explain it, a little tongue-tied here and there. But that's what I did on TBT. So again, if you got any questions, let me know. Okay. But again, selling the puts on the week of expiration on an ETF or a stock that you already, that you would love to own if you got put, right? If you get enough juice in it, enough premium in it, and you've only got a few days to expiration, why the heck not do it? So again, I was long the underlying here, got stopped out at 76.35. I'm flat the TBT. So I continue seeing the market just sell off, and I'm looking at this option going, God, why wouldn't I do a 75 and a $73 strike for 2 days expirations collecting, $1,000? That's a no-brainer, okay? So I rambled on that. Let's move on. That will only be like another minute here. All right, let's move on to the Netflix play. The Netflix play looked pretty good yesterday. I mean, look at the market hit 250. So finally we started breaking up. We broke up through the prior 2 days highs. We traded up to 250, a little shy of the 29th high of 250.67, not by much. I'd really like to see this market clear up through. I mean, if we can test 250.67, 251, at that point I would bring my stop up even further. But for right now, I'm going to leave my stop on Netflix at 241.61 and just leave it there. I got to give this a little bit more room, so that's where I'm at here. Look at Apple. Apple Computers, you can see, has been red bars the whole time. Obviously, the trend is down. Longer term, the trend is still down. But according to what I do, a little shorter term, look at the bar. We turned a little green here. Again, and I've been saying this for the last couple days now, I definitely am looking to buy a pullback on Apple. Look at the last 3 price bars. 1, 2, 3. Look at the lows. The lows of these daily lows here are higher than the upper Kiltner channel band, which to me tells me that there's some momentum here. So I definitely want to be buying a pullback, but I wouldn't be really looking to buy a pullback until we get minimum mid Kiltner band, a little lower by the 50, right down in here where I'm moving. This is where I'd be looking to buy, about 20 points lower. So quite frankly, you gotta have a little patience here. So that's what I'm waiting for on Apple. Take a look at crude oil, folks. A couple days ago, what was I saying? What did I point out? This area, right, 38.2% retracement from low to high. This was an area in which you would be looking to buy. That's the first level of support right here, right? Support is not synonymous with looking to buy that market. Look at this. Market's bounced up, did exactly what I thought it would do, and that's to retest this high. If you chose to look at the USO, the ETF, same thing. Not quite there, a little off. Didn't quite test that high. But nonetheless, the market has rallied nicely. Look at the E-mini S&P 500, all-time new territory, right? Took out those highs yesterday and actually closed. Look at where we closed. Closed at 1,700 and a quarter, okay? Closed above the all-time high, above 1,700. Unbelievable. This market is extremely strong, and I'll let you know exactly when I'm looking to buy this market for, a swing trade. And what I would use on that is the SSO, right? SSO looks just like the S&P 500. It's 2 times the index. It's a mirror, right? So that's all I have for you. A little long today, 8.5 minutes. Hope you got something from it. If you got any questions, let me know. Have a profitable day and a fantastic weekend. Bye for now.